no turning back, we're on our way. Crypto's here to lead a bright day. Educate and trade, let's pave the way. The alliance.
Hello everyone. This is Shankar Poncelet coming to you live from Amsterdam, and you are listening to the Crypto Alliance theme song. Yes, we actually have a Crypto Alliance, and if you want to join the Crypto Alliance, which I highly recommend, you want to go to mycryptoalliance.com. We actually have a nice quiz that you can take, and what it will do for you is it will tell you what kind of kryptonite you are, what kind of Kryptonian you are. And hopefully your result will be that you are a saver, because yes, we can put it the way we want. It just turns out that the best approach to actually build long-time wealth in crypto is indeed focusing on Bitcoin. Yes, there is trading, yes, there's investing, and that stuff works, but we must not forget that most people actually consistently lose as traders and investors. Only a minority wins, which is why I want most of you actually to be savers. That means you dollar cost average into Bitcoin. You buy a little bit of Bitcoin every day, no matter what happens. Even as a trader, the name of the game is to trade these other coins, often called alternative coins or meme coins, and then you take the profits and bring it back home to Bitcoin. Now, if you don't know how to dollar cost average into Bitcoin, you are in luck. I have a guide for you. You got to go to the landing page, crypto.lifestyle, and then I'll have a video that comes to you through an automatic email that shows you how to dollar cost average into Bitcoin. Now, today is a very important day for Bitcoin, at least when it comes to estimating where the crypto market continues to go. As you know, Bitcoin is like an index for the crypto market, meaning where Bitcoin goes, most of the coins go. And of course, Bitcoin is not an isolated thing. It is part of a larger economy, a global economy, of course. And you may be surprised to know that a large factor of what drives the direction of the global economy is the United States 10-year interest rate. So we're going to talk about that, because in exactly 1 hour, there will be an important meeting where we have the release of the inflation rate here in the United States, which in turn often influences the 10-year yield rate, which in turn influences everything. And we're going to try to understand that a little bit, because I want you to be informed as you navigate your journey in investing in crypto. And that's what we will see today. So let's get this show on the road. Don't forget to smash that like button, subscribe, and share this video with someone you think can benefit from it. Yes, so I told you that there is such a thing as the 10-year yield rate that is influenced by the monetary policy of the United States, and that in return is often influenced by the inflation rate. And the inflation rate is actually being announced in just about 1 hour. So it's a really timely point in the financial markets. And today you will actually understand what that whole thing means for investing. So first, let's try to understand
this concept of the 10-year yield. So the 10-year yield, Treasury yield, is the interest rate paid by the US government on its 10-year bonds. Okay, for those of you who don't know what bonds means, it's just simply if you as a person or as a company lend money to the government, that is the bond that you then hold. It's considered a risk-free rate, and it is a key benchmark for everything from mortgages to corporate loans. So why is it risk-free? Well, if you were to lend anyone money and want to be very sure that you actually get paid back, you basically want to lend your money to the most trustworthy person in the world. So you would lend most likely money to one of your parents, right? Because you trust them. So when we take that to a larger scale, you want to lend money to the most trustworthiest nation on earth in terms of financial might, and that just happens to be the United States. Which means that if you want to have a very safe and stable investment vehicle, you're going to buy those 10-year bonds from the US government, meaning you lend the US government money, and then in return, they pay you interest. And that guides everything in the financial industries, as you've seen on the previous slide. It guides how much money you get when you have your money in your savings accounts, but it also guides how much money you have to pay when you take out a loan, how much money you have to pay on your credit card. So essentially, that is the understanding of the 10-year yield rate. So if this was the first time where you actually understood what a bond is and what it means that you can actually lend the US government money, then give me a like. I think that is just fascinating that that is even possible. Now, this is a very low risk investment, one of the lowest risks you can take. And also, for those of you interested, I believe there are ways where the interest received from directly investing in 10-year bonds can be tax-free. Now, I'm not a financial advisor, I'm not a tax professional, but I did hear that. And one thing you also need to know is that it is rather simple for most US citizens to directly buy those bonds from the US government. There's a very specific site where you can do that. So you don't have to go through a bank, you don't have to go through your financial advisor. You can if you want that load taken off of your hands, but you can also go direct. Now, I want to a little bit go into, we're talking about crypto here. I'm talking about crypto because I personally believe that when I look at all the different means to build my wealth currently, crypto is the one that proportionally gives me the fastest pace, the fastest return. And I will make a case today that for most of you, that is most likely going to be Bitcoin. And we're going to look at hard numbers and facts for that. But before we do that, I want us to look at this table here so that we kind of understand what drives this 10-year yield movement, okay? Now, I told you in less than an hour, we will hear about the release of the inflation rates in the United States. Now, that's the first column here. If inflation is rising, then the 10 yield movement rises as well, because people want to go into safety. Inflation generally is not something that people like, and they want to go into safety. And I just told you earlier that one of the safest things in the world is to lend money to the most stable nation financially in the world. That is why those yields, that is why the yield would rise. That, of course, in turn is not so good for those riskier assets, because if you only have a certain amount of money that you can invest, right? So if you're going to invest in low risk assets, well, then your high risk is going to go down. So what is high risk? The stock market is high risk, which is when inflation rises, is bearish for the stock market. Crypto is high risk, which is when inflation rises, is bearish for crypto. The US dollar in turn grows in value. Now, why might that be? Well, that is because when other nations lend money to the United States, they have to purchase our currency. And when a lot of nations purchase our currency, then that drives out the price of the currency. As with any asset, if a lot of people want it, then that generally drives the price up of it, which is why it's bullish for the United States dollar. So all those of you who internationally get paid in US dollars, you actually like that, right? So when we have inflation in the US and our stock market goes down and crypto goes down, you like that because you earn more money, relatively speaking. And of course, bonds, the prices drop as well because that is also a risk asset, although it is not as risky as the stock market or the crypto market. So what we really want as people who operate in crypto and who also operate in the stock market, and why do we want that? Well, we want that because it just outpaces the return on investment on those super safe investments, right? What we want is we want a falling inflation. We want a 10-year yield to actually not climb up, but we want it to go down, because that gives us a bullish stock market, bullish crypto, a weaker US dollar, and that is what we want. So does that make sense? Now, I told you today there will be indeed an announcement of the consumer price index, and I asked AI what is actually expected to be announced in less than an hour at this point. Because here is actually what is considered bullish. What is considered bullish is when the inflation rate comes in lower as expected. Bullish, of course, from the perspective of the kryptonite and of the stock investor. Or at the very least, we want the inflation rate to come in exactly at the rate that the market expects. So then let's look at it. I generated this with AI just minutes ago. Economists currently anticipate a year-over-year increase of 2.9%, consistent with the December rate. So that 2.9%, that is the inflation rate that is expected by economists right now. And then so there is a consumer price index. That means that's all the things that you and I buy, that and then there's a core CPI that excludes food and energy. You know, that is different. That one is expected to rise by 3.1%, slightly below the 3.2% increase observed in December. So what that then tells us is if we get an announcement of 2.9% or lower, that is bullish, and that will likely have a positive impact also on crypto. And when I say crypto, I mean, of course, Bitcoin, because when Bitcoin goes up, everything else goes up. And at this point, let me actually show you a chart that we looked at last time, because again, we always want to be focused on Bitcoin. Always want to be focused, always want to be greedy with Bitcoin. You can't do anything wrong, in my opinion. No financial advice given here, of course, but you cannot go wrong amassing the most important asset that the financial future is relying on, which is Bitcoin. Bitcoin, Bitcoin, Bitcoin. And this is not just words. I will actually prove to you, I will back up my statements with us looking at different charts right now. So first of all, a chart that I love, this is the logarithmic regression chart. And okay, so again, we're looking at the evolution of Bitcoin starting here on the left-hand side in 2011. And then we look at how did it evolve over the different market cycles, bull, bear, bull, bear, bull, bear. And here we are in a bull run again. Okay, it's just on the right-hand side. Small distances mean a lot more money. Look at this. One band here takes us from 10,000 to 100,000. Whereas on the left-hand side, we needed basically 4 bands to get from 0 to 100. But what I also want you to look at is that here on the right-hand side, this upper band, the upper boundary of this regression chart, almost touches $1 million in the early 2030s. That means that at some point in 2030, you will very likely see during a peak of the market a $1 million Bitcoin. Now, let me ask you, if I told you now you can start investing into something that within 5 to 6 years has a high likelihood of reaching $1 million in worth per coin, would you say that is a good investment? Type in yes or no in the chat. I really want to know. And if you say yes, then you want to know my DCA strategy. And that is a gift from me to you just for joining my mailing list. You just go to crypto.lifestyle. It's blended in here. It's a landing page. You give me your name and your email address, and then you get an automatic welcome email that contains a link to a video that explains in a beginner-friendly way how you can start your journey dollar cost averaging Bitcoin. Now, I know a lot of people will say, well, yeah, but you can trade meme coins. You can do all these cool things as traders. And that is absolutely true, because I do that myself. I spend up to 4 hours every day actively trading and making a living off of it. This is what I do primarily now, and it works. But I do it because I have an understanding of how to trade the markets, and I have an understanding that what I really want to do is build up my nest egg of Bitcoin. And that will be really what supercharges my retirement, that big Bitcoin bag. I think it is inevitable right now. It is just inevitable, but we are still so early, and a lot of people are still hesitant. They say, what if it fails? What if it goes to zero? What if it happens? What if what happened to the tulips, since we are here in the Netherlands? What if what happened to the tulips happens to Bitcoin as well? David here, my friend David, who just commented on LinkedIn, he once told me, there was a tulip bubble in medieval times, and I will just say, listen, David, Bitcoin is not a tulip. Okay, it is an excellent store of value. You can buy fractions of it, sand fractions of it, and all of that. It is not a flower. It is very advanced cryptographic technology that solves one of the biggest problems that mankind faces, which is that there is not really true money around. True money holds value and is inflatable or uninflatable, meaning no one has the power to just print more of it, because we don't want that. Why would you build up savings in a currency where a government can just come in and say, we'll print more of it now because we need it to bail out the banks or to fund our wars or whatever it may be? Okay, so that's why I am here to say the only true currency that has ever existed is Bitcoin. Now, not financial advice. This is my humble opinion. Now, you will say, that's cool, Shankar, but there's Ethereum, there's Solana, there's all these meme coins. and I think I want to invest in those. And I'm here to say, yes, go ahead and do that. You can for sure make money with it. But if we take a high time frame view on the markets, Bitcoin always seems to be the winner. And you're telling me, well, why is that? Well, let's take a look. Now is the time to look at the charts. So before we focus on Bitcoin specifically, let's take a look at this chart here, which I put together for you. And I want you to understand what you're looking at. So basically here at this level here, we have 2017. And then here at this level here, we have 2025. That's right now. And what we are looking at is this pink line is the evolution of the price of Bitcoin. Okay, so it goes up through its bull and bear phases. And then the blue line is the movement of the inflation rate here in the United States. And essentially, this goes back to what I wanted to show you. There is an inverse relationship between the inflation rate and Bitcoin, which means the inflation rate and crypto. In other words, to simplify this, when inflation goes up, crypto goes down. When inflation goes down, crypto goes up. So really, this is why it's so important to understand that we want here at 2:30 Central European time in the afternoon, this is when that meeting happens where we hear the numbers. We want to have the result to be the inflation rate stays at 2.9, or, which would be very bullish, is even lower. Like if it came in at 2.8, that would be really cool. So why would it be cool? Because we are, as many of you know, we're a little bit in a situation here with Bitcoin that is a little bit annoying. It's been annoying for a while. And why has it been annoying? Well, we've been stuck in this range here. Let me look at this range. So you see here, this is 21st of November, and then this is today. So we see we've been ranging in this between, roughly speaking, 92,000 and 106,000. This is what crypto does. It goes up and down and up and down. Okay, it does that for 80% of the time. Only 20% of the time does it break out of a range into, it breaks the trend, as we say, and it goes into a new range. Now, understanding this is pretty cool, because if you are a good trader who understands these movements, what you want to do is you buy when it's at the lower end of the range, you sell when it's high, and so on and so forth. And by the way, for those of you who didn't know, you can make money here when it goes up. That is pretty obvious. We call that, we long the market. We buy Bitcoin and sell it here. But did you know that you can also make money when the market goes down? We call that, we short the market, okay? Which is essentially here, you go to the trading platform and you say, hey, I'm going to borrow some Bitcoin from you and give it back to you at a later time. But the trick is you give it back when Bitcoin is cheaper. Okay, so you get the Bitcoin here, you borrow the Bitcoin, you immediately cash it in, you have the cash, and then when the price is lower, which is of course a speculation, you buy the Bitcoin at a cheaper rate and give it back, and you are clean, right? So that's called you're shorting the market. By the way, if you say, well, that is pretty dang interesting, I want to know how to do that, you know what to do. You need to actually be learning that from me, but at a healthy pace, Now, sometimes I organize these very intense boot camps for you to learn the basics of crypto. All the things that right now make your head spin are covered in that boot camp. The only way to know about the next occurrence of the boot camp is being on my mailing list. So make sure you go to crypto.lifestyle and you sign up. Now, having said that, we always want to think about, well, what's the next move of Bitcoin? Because that kind of gives us guidance as to where we are headed. What's the next move of Bitcoin? So, by the way, let me get rid of this. Yeah. So we are currently here. We are in this downtrend. This is where we are now. Okay. And if we have a positive inflation announcement, meaning 2.9 or less, what I think is a high probability for what Bitcoin could do is what the green arrow is doing here. Okay. So it quickly kind of starts going up. It will probably bounce off of that mid level here of this trading range. We call that a bounce off of the mid range, and then it comes down a little bit, and then it will likely push through and eventually go much higher. That is what we all want. So we want low inflation. Now, if the inflation rate is as expected, which I believe that is the most likely case, the orange arrow here is we don't have high inflation, but it is as expected, then I think there's a high likelihood that we will still kind of test the lower end of the trading range here, and then we will continue the bull run. Anything else where we have, heaven forbid, a higher inflation rate than expected, then I'm seeing Bitcoin go down and test new lows. Probably, I think most people, experts say, there's a lot of support here in this area, which is around the $82,000 area, right? Now, don't forget, as traders, we can make money either way if we can kind of foresee where it's going. As savers, you don't really care. You just dollar cost average. The investor might say, well, I'm gonna wait until I get a good rate for my Bitcoin, and I'm always just buying at moments where there's a discount. And all of this is again taught in my bootcamp, and you want to be in my mailing list to know about these things. Listen, this is a long journey. I know it's very, very tempting to say, well, I'm going to survive by being a trader. I'm going to quit my 9 to 5. I'm going to be a trader and travel the world just like Shankar, because he's in Amsterdam right now. And in a week, he's going to be in Sheffield in the UK. And then a few days later, he's going to be in Cape Town. And I have joined his email list, and I have joined his social media because that's in his email list, in his welcome email. And I see this guy has a life like nobody else, right? They like all the time, they're out and about going to fancy places and so on and so forth. It's not easy. It took me from 2016 to now to get to there. But I started in 2016. And your question probably is, well, is it too late? No, it's not too late at all. This is why it's not too late. In my humble opinion, not financial advice. I'm not qualified to give you financial advice. But this is the Bitcoin logarithmic regression bands. And you can see, well, likely, there's a very high likelihood that Bitcoin will be worth $1 million within 5 to 6 years. Who cares when it is? 5 to 6 years is pretty early, won't you think? So I told you earlier that I have the conviction that Bitcoin is still king. Now let's go a little bit into why that is. So why is the following? So first of all, I want us to take a look at the total crypto market cap, excluding Bitcoin and ETH. Okay, so we are in this trading range. And by the way, if you don't know what the crypto total market cap is basically all the value that is represented in crypto, excluding Bitcoin and Ethereum. We take those apart, right? But we are here in a trading range as well. Okay, we kind of slipped a little bit below here. This was all the the reason we slipped below is because of the tariff trade wars, and also when DeepSeek came out, that really like startled us. But I think we will reclaim the normal trading range. Now, when it goes up, the big question is, well, can I catch most of the value by trading alternative coins or meme coins, or can I catch most of the value by being in Bitcoin? That is really the big question. Now, if you are a professional trader, most likely you can catch a lot more value by trading these coins. But remember, only 20% ever make money. The rest, 80%, they lose money. So would it then not be better for most of you to be holding and buying the coin that is the winner in the long term? And that is Bitcoin. So why is that Bitcoin? Well, if we take this crypto total market cap and we compare it to Bitcoin instead of the US dollar, then we get this chart. Okay, so here you see how this is calculated. In the top left corner, total market cap divided by Bitcoin. So, and we take a very, very high time frame view. Okay, very high time frame, even more. And what do you see? Ever since November of 2023, the entire crypto market compared to Bitcoin is on a downward trend. So yes, there were moments where it went up and down, and this is where the traders make money, okay, in these up and down movements. But a lot of those traders would have done much better buying Bitcoin here and then just riding up, because don't forget, this is pitted against Bitcoin. So that means that Bitcoin performed stronger than all the compared to the entire crypto market. So same if we look at, by the way, there is something called others. And others is basically, here you see crypto total market cap excluding the top 10 coins. Okay, so this represents the alternative coins. Okay, so we do have for traders amongst you, we do have something here that looks very nice, which is the cup and handle formation. So here we have the cup, there we have the handle, and then it goes up. But yeah, we're kind of struggling a little bit here. This went down a lot, right? So we do need, if we want our alt season, then we do need to get out of this trend and come back higher. Okay, and that of course all has to do with macroeconomic factors. The quantitative tightening has to stop, right? It has to stop. Now, but what I wanted to get at, if we look at all the altcoins and we compare those to Bitcoin again, same chart. What do you see? What do you see? Since January of 2022, downward trend. To me, this speaks a very clear language. Okay, so we have all of crypto. This is this chart. All of crypto compared to Bitcoin, downward trend. All of altcoin compared to Bitcoin, downward trend. Okay, so well then now let's talk. Okay, I think does this make sense? By the way, type in yes in the chat if it makes sense. What I'm trying to convey here, what I'm trying to do here is I make a case for you to focus on Bitcoin and to only become an investor or a trader if you really say, I'm going to educate myself and I'm going to learn this trade. I'm going to understand that the likelihood of me winning is slim. I need to really pay attention and practice, because then over time I will become profitable. Does this make sense? Type in yes in the chat. So I want to compare Bitcoin to two more major coins that a lot of people talk about, which is Ethereum and Solana. Okay, so here again, Ethereum pitted against Bitcoin looks like this. So first of all, we've had this long-standing support line here. Really, this support line has held true again for ETH against Bitcoin for many, many years. And we definitely have seen this double bottom here in 2019. And then ETH has outperformed Bitcoin essentially until August of 2022. So this is the phase where which we call the altcoin season. And then we're going down again. Now, hopefully putting in another double bottom. Okay. The problem is what has happened here is that first of all, we lost this support for a brief moment. And now we're kind of struggling to create that double bottom. Now, that will have to be seen. I still hold a little bit of ETH because I do believe that we will get that bounce, but you need to time it. And all in all, don't forget the other chart where Bitcoin outperforms anything, right? So that's just what we have to say about ETH. A lot of ETH believers really hope for that double bottom formation and then the start of the alt season. Okay, let's look at Solana against Bitcoin. This is here, Solana against Bitcoin. And what I want you to see is, first of all, you know by now in crypto, there's always these trading ranges, okay? So we have very likely, let me build in a trading a channel here. So if we believe in trading ranges, and if we understand that during 90% of the time, such a coin bounces up and down the trading range, then what does this look like? What does this look like to you? Well, it looks like there was a high for Solana here in December of 2021. And then we are kind of flirting with that high in this whole time frame now. This is where we are now. So logically, it would make sense. Now, I'm not saying this is going to happen, but it would make sense that Solana compared to Bitcoin, don't forget this is Solana against Bitcoin, comes down to the lower end of that range again. Now, none of this has to play out like this, but what we're doing here is we are looking at the past to try and predict the future. And this is very difficult. This is very difficult. Awesome. Thank you, David. David gets it. David is a very critical viewer, and I love your input, David. Great. I think that's what I have for today. Don't forget that we have started the Crypto Alliance to help everyone get into crypto effortlessly and to help everyone decide what is my risk profile. Should I be a saver and DCA like Shankar says, or should I be an investor, or should I be a trader like him? You can take your assessment quiz. We have one available. Go to mycryptoalliance.com. You can take an assessment quiz there. All right, this was Shankar Poncelet streaming live to you from Amsterdam. Stay safe and make decisions that are going to be prosperous for you. Bye-bye for now. Decentralized, let your voice be heard. Everybody joins the crypto world. From our lips call to